Dad. Does Medicare cost more for rich people?
Well, it depends on how we're defining rich. If we're talking about net worth or size of investment accounts or asset base, then no, that won't have a direct impact on the cost for you for Medicare. However, if we're talking about income level, then yes, if you reach certain income thresholds, then you will have to pay additional Medicare premiums, raising the cost of Medicare for you. Now, this isn't for all parts of Medicare. So we have Part A, hospital insurance. Now, the vast majority of Medicare beneficiaries are eligible for premium-free Part A. When I say vast majority, I mean about 99% of beneficiaries. So you don't have to worry about that. There's not a surcharge there. But for Part B, medical insurance, and this surcharge is called IRMAA. And that stands for Income-Related Monthly Adjustment Amount. It's essentially a surcharge that you have to pay in addition to your baseline Medicare premiums. So it applies to Part B. And don't forget, even if you're on Medicare Advantage, you still have to enroll in Medicare Part B. You will still pay this surcharge, this IRMAA surcharge. Also for Part D. For Part D coverage, IRMAA will also be applied if your income is above certain thresholds. If your Medicare Advantage plan includes Part D, you're paying that surcharge as well. The question though is I'm talking about income thresholds. Well, how does this work? What income? And how can you plan around that? How can you plan to manage that? Because if you're enrolling in Medicare, the income that they're going to look at isn't even from this year. It's from the last 2 years, 2 years ago. So let's talk about how that works. Look, I want you to have the retirement that you've always dreamed of. Go on to travel, go on vacation, spend time with family, donate, make charitable contributions, use your resources the way that you've always wanted to use those resources. That's why you've worked all this time, right? And a key piece of that is minimizing any penalties or taxes or any surcharges. And that's where IRMAA falls in, right? In order to plan for IRMAA, because it can be a surprise for folks, or avoid IRMAA, you have to know how it works. Now, we talked about income. Income being in certain ranges, yes, you got to pay a premium. You got to pay IRMAA for Part B and Part D, yes. But which income? Because there's a lot of incomes in the tax code. There's total gross income, adjusted gross income, of course, modified adjusted gross income, and it means different things depending on where it is in the tax code. You have taxable income. But for Medicare and for IRMAA purposes, this is how you would calculate modified adjusted gross income, because it's that modified adjusted gross income that is applied to the ranges to show or to indicate what that surcharge or where you fall in that IRMAA range. And we'll talk about that in a second. So you started adjusted gross income. So get out your 1040, get out your tax return, that page one, first page of your tax return. Got line 11 on the 1040. That's your adjusted gross income. And then you add back any tax-exempt interest income. So what is that? That could be like that's municipal bond interest, right? If you don't have muni bonds in a taxable portfolio, well then that number's zero. If you do, you have to add that back. And that gets us to modified adjusted gross income for IRMAA purposes. There's also another wrinkle, and I mentioned this earlier, is that the Social Security Administration, Medicare, does not look at that for this year because your taxes aren't done. They can't do that. The information isn't in the system. So they look back 2 years. So if it's 2023, if we're sitting in 2023 and you're enrolling in Medicare and you're wondering if you're going to have to pay IRMAA, Social Security Administration and Medicare is going to look back 2 years at 2021 modified adjusted gross income. If next year we're thinking about 2024, you're trying to figure that out, where you're going to fit in those brackets. Well, for 2024 premiums will be based on 2022 modified adjusted gross income. And you can see right there how it could sneak up on someone if they're just enrolling in Medicare at age, let's say you're enrolling in Medicare at age 65, and they're looking at your income, your modified adjusted gross income from when you were 63. And let's say when you were 63, you sold all these stocks or sold a business and your income is really high and you weren't planning on it and you weren't planning on that IRMAA applying to you. Well, now it's too late. It's 2 years later and they're looking at those transactions and that puts you in a higher tax bracket. Now you can always appeal. You can always appeal and say, look, that was just one high year. My income's a lot lower now. You can do that. But this is how it works. So think about that. So IRMAA doesn't sneak up on you. So how exactly does it work? And what is the amount of IRMAA? Well, look, this table will tell you exactly. So this is for 2023. These are 2023 numbers. If your modified adjusted gross income, look at single. If your modified adjusted gross income, and again, that's your adjusted gross income plus any tax exempt interest income. If it's less than $97,000, no surcharge, no IRMAA. You're going to pay $164.90 for your Part B premium. And whatever your Part D prescription drug plan is charging you, that's it. That's what you're going to pay. Now, if that modified adjusted gross income is up over $97,000, and between $97,000 and $123,000, now you got to pay an additional, what is that, $70, $65 a month in Part B premium. And that premium, right, those premiums go to Medicare. You pay that, they are taken out. If you're on Social Security, they're going to be taken out directly, just like your regular Part B premium. They're going to be taken out of your check. So you have to plan for that. You may say, oh, that's only $60 a month. But if there's a way we can plan for that, right, and make adjustments to our income or maybe spread out income. And what I'm talking about is maybe it's a Roth conversion that you can spread out, or maybe that is a sell of stock that you can spread out. Now, if you're working, that's harder, right? You just work and you just pay the Medicare premium. But if there are other things that you can do to adjust your income so that you don't have to pay that premium, well, then that's what you do. Same thing for Part D. Let's say your income is you're single and your income is $98,000. You're just $1,000 over the threshold. And now you got to pay an additional, $1,220 per month. And this is per beneficiary. So you and your spouse are both on Medicare. Your income, you're marital filing jointly, and your modified adjusted gross income is $200,000. Well, then you're in that on that second line. You're going to pay each going to pay an additional $65 a month in Medicare premium. So $130 between the two of you, and an additional, $1,220 or $1,220 times 2, right? So that's $24.40 in premium. You may say, oh, that's not a lot, but that's your money. Is there something that you can do? Is there a way to adjust that income now that you know that it's coming in order for you to avoid that IRMAA surcharge? And I will say this is just for the year. So your income fluctuates, from year to year. Every year, Social Security Administration and Medicare are going to look at that income, calculate that modified adjusted gross income, and determine what your premium is going to be. So to answer the question, do rich people pay more for Medicare? If we're talking about income, yes, they do. They do pay more. They pay a IRMAA surcharge as a result of their income and where their income fits in those thresholds. Plan for this so that you know what's coming, and maybe you can adjust your income so you fall below some of these ranges. As you can see, once you get over, $750,000 married filing jointly, that's a significant, that's $400 more each in that Part B premium. And you're paying this premium no matter whether you're on original Medicare or Medicare Advantage. You'll be paying this premium. And then we see marital filing separate. Man, everything is all the worst tax tables. I mean, married filing separate really is a struggle. It is a struggle. You'll see that the penalty, you make any more than $97,000 marital filing separate, and your premium goes from $164.90 all the way down to $527.50. You make $98,000 versus $97, and that is a $360 difference. That's significant. Can we plan for that? Yes, you can plan for that because I could put a cramp in your retirement living. And again, I want you to be successful.
I got it. That makes sense, Dad.